Good morning, and thank you for taking the time to be here today. Fresh Squeeze is a quick reminder that you can do the hard things with your money and how to get started. Today's theme is September Tax Check-In. My name is Kelly Reddy-Heffner, and although there is no one-size-fits-all solution to your finances, you can start somewhere, perhaps here, to work towards what you want to accomplish. Last week, we talked about a number of financial topics related to the upcoming election, and again, at a very high level: investment return, taxes, inflation, and student loan payments. After that post and the presidential candidate debate, my esteemed colleague Max and I decided to go back and take a deeper look at taxes with a little more detail. It is the time of year when a tax check is recommended, so perfect timing. What is a September tax check-in? It is an opportunity to see what your tax liability estimate is for 2024 and have enough time to ideally prepare and explore some tax strategy before the end of the year. If your taxes are a bit more complicated than a W-2 wage earner, you should ask your tax preparer if they can do a tax estimate for you to see where you're at for the 2024 year. More complicated might include, but is not limited to, 1099 income and expenses, either as an independent contractor or self-employed person, rental income, capital gains or losses from investments, corporate taxes, inheritance, and these are just to name a few of what we would consider some complications. If you are a W-2 wage earner and take the standard deduction, you can use the IRS estimator tool, and we'll provide that link in our slide deck. You also could take a look at your pay statement and take a look at federal, state, and local withholding and see the current pay period listed out and the total for year to date. Again, this is a little bit easier to take a look at if you've been with the same employer for the whole year. If you have changed employers, that might be considered a little bit more of a complication as well, along with getting bonuses from an employer. But if everything is about the same baseline from last year, you can take a look at what your taxes are estimated to be using that per period and calculating that out for the rest of the year and comparing that with your last year's tax return to see if they're in the ballpark. If something is off, again, that might be a prompt to reach out to a tax professional. Some very high-level strategies, and these again are not all the strategies, but just to give a few examples, might include adjusting withholdings. It is arguably potentially one of our least favorite tax strategies, but sometimes our withholding, is just not correct for what our tax liability is. It may need to be adjusted to not have too much of a tax refund or too much of a tax liability. There are also some other items looking at pre-tax retirement contributions, HSA contributions, charitable giving, and gifting strategies. Why are we talking about taxes again? Well, it is a good time to do a check-in, and we also sometimes have some feelings about taxes that warrant some additional consideration. There was a recent research study done by Pew that suggested that 4 in 10 adults are bothered by what they personally pay in taxes. 29% say it doesn't bother them much at all. So in reality, you might fall on the side of bothered or not really bothered at all. But we want to make sure to loop back and make sure you have research references to be able to help make some informed decisions about how the impact of taxes might impact some of your other decisions for this year. My informal research suggests that unpleasant surprises typically bother people the most. So again, taxes continue to be a conversation post that candidate debate. The resource we provided from the taxfoundation.org is a nonpartisan organization that is looking at the campaign tax proposals from both candidates. So you can see under trending topics on their website, they have details and analysis for both the Harris and the Trump tax proposals. I highly recommend reviewing the materials if this is an important consideration for you. Analysis were also conducted by Moody's, Goldman Sachs, and the Penn Wharton budget model on both candidates, and the Peterson Institute for International Economics also provides an estimate for the added cost to middle-class families from tax plans. So again, those references are all going to be included in our slide so that if you want to check anything out and get more information, you will be able to do so. Of note, both plans reference tariffs. So thought we would just give a quick definition of tariff. So the definition is a tariff is a tax imposed by one country on the goods and services imported from another country to influence it, raise revenues, or protect competitive advantages. U.S. companies could benefit from a tariff if their quality goods or services are now priced lower than a competing product or service from another country. It could also result in U.S. companies raising prices as well. Unfortunately, the U.S. consumer can also bear the cost of tariffs, since some of those increased costs are sometimes passed directly to us. So again, be informed, be prepared. One additional tax caveat is that sometimes the tax law changes, and sometimes it's pretty late in the tax year, including even after the tax year has ended into the following year. So it is good to have an awareness for this potential. Sometimes tax strategy, people can make choices about their taxes based on the potential to get a tax break in one area, and the tax law can change before that can be fully utilized. So check out our references page. Next time we're together, we'll talk about employee benefits, since it is also that time of year for many employees as well. Thank you and have a great day.